Thanks again for having us. I really appreciate it. Now, I mean, I think you were promised about a half an hour on the big picture, US, China, what's happening in Australian agriculture, but I'm going to have to apologise up front. I flew in on the 6 o'clock flight out of Melbourne this morning. I would have come in last night, but my fiancée and I went to Midnight Oil, and they were great, but I've had about 3.5 hours sleep and literally 5 coffees. So is anyone from NAB here? Have they showed up yet? No? Perfect. So you might get something out of me. I'm not going to take any sort of responsibility for what comes after this. But look, I thought I'd talk for about 15, 20 minutes, maybe have a bit of a Q&A session. I've already barreled a couple of people up for some Dorothy Dixes if nobody's keen to chat. But if you are, that'd be fantastic. So we're going to talk US, sort of big picture to start off with. Now, this is our leading indicator. I've got lots of boring charts, which seemed like a very good idea at the time, but now in the cold, hard light of day seems like a disaster. I mean, the US is in a funny place at the moment. They had, it was a huge recession coming out 2008, 2009, a recovery, and now when you look at our sort of global sort of indicator of where the global economy is going, it's ticking along. It's going all right, but it's hardly shooting the lights out. Now, I reckon the really interesting question for the United States, and I just got back from there about a month ago. We went to my fiance's cousin's wedding, which was a fascinating experience, particularly for some of the Australian wines that were offered. And it's a weird country because you fly into JFK, you fly into New York City, and the wealth on display is extraordinary. It is a prosperous place in big coastal cities. LA is booming, San Francisco's got some of the highest prices in the world, New York is doing really well. You get the train up to Boston, and Boston's doing all right, but you look at every single little town on the northeast corridor, apart from the ones with the lovely sort of harbours and boats, and the factories are all derelict, and there's a lot of people living, pretty grim existences. So it's sort of a country where some people have recovered and done really well, but by the same token, there's pretty grim times still, a decade after the recession for a lot of people. And when you look at your sort of average US wage earner, a lot of them haven't basically in real terms seen a pay increase really since the 1970s. So you've got people who are structurally cut out of US progress and US economic growth, which perhaps goes some way to explaining what happened with Trump and why he did so well in those Rust Belt states, which have been so reliable for Democrats up until that point. The fact that we saw that was a shock to a lot of people, but my barometer of US politics, which is my fiance's aunt's partner, who's a big Trump supporter, my sample size of 1, says we probably shouldn't feel surprised about it because they struggle to own a house, keep a job, send their kids to college. It's very tough. It's a tough life there. So that's the big picture based on my recent wedding experience. If we actually look at some data, if you're interested, it says the US economy is tracking all right. I mean, it has recovered. The unemployment rate's now lower than Australia, so it's sort of down that 4% mark. GDP growth is positive, but when you look at it, and when you look at that chart on the left there, and look at the averages, the pre-GFC levels significantly higher than post-GFC. So the recovery you've seen from the GFC has been a pretty weak one by historic standards. We're talking about this is the biggest US recession since the Great Depression. Now they've recovered from it and unemployment's down, but it's still hardly an economy which is really shooting the lights out. And when you look at the whole Trump picture, since Trump was elected, you've seen some really interesting things. I mean, the stock market's gone absolutely crazy. Bond yields are up. I think it's really interesting because there's a lot of expectation that Trump will get stuff done and that stuff will be positive for business and will be positive for the US economy. He's promised a big tax cut. He's promised a whole lot of things which, if you're into that kind of thing, you think might get the economy going. I think, personally, there are a lot of issues with that. The biggest which being that I think Trump's probably crazy, and I don't think that helps. He's actually not been able to get much through so far. It's been a fairly ineffective government. I mean, despite having a majority in both houses of Congress, he still hasn't been able to achieve the tax cut. He can't get the healthcare stuff done. So there's a lot of expectation here that a lot of things are going to pass. But this is pretty much the anniversary of the US election, and what have we seen? Very little. So it's going to be tough to see whether Trump can actually do anything, and if those things that, if he actually does anything good. I mean, I think the geopolitical risks are going to be pretty significant. Certainly what's happening in Korea, that could cause all kinds of mayhem. Look at US interest rates, they're going up. Trump's just got a new Fed chair, Powell, so Yellen's out. We expect US rates to probably keep increasing a little bit, but not back to the historic highs that they were. That's going to keep pressure up on the US dollar, might be good for the Australian dollar, but look, we'll have to see. This is the tough thing, and the thing I alluded to at the start was that unemployment's down, but wages are not really going anywhere. They're still below US pre-GFC highs. They're nowhere near it. That's a significant risk for the US economy. It's a tough thing for the retail sector. You've seen Amazon basically demolish the entire US retail sector. If you're an old-fashioned, we were in the US recently, and we went to a suburban mall on the outskirts of Boston. I'd never been to something like that before. And they've got their Sears, and they've got all the old big box sort of department store retailers, and they're all empty. The place was desolate because everybody is buying everything from Amazon now. So wages aren't really going anywhere. Retail's pretty weak, and the sort of stuff that you see in retail is all through Amazon. So it's a tough picture there. That's sort of all I wanted to say about the US for the moment. I'm going to bail a couple of people up and see if they're interested in chatting more. Overall, I think it's not a bad story for the US, but what really keeps me awake at night is the inequality of it and the lack of opportunity structurally for a lot of people in that economy, and the political risks that you see associated with that. And I think we're going to continue to see those risks over the future. So for the wine industry, selling into the US market, great opportunities for very rich people, but for ordinary working people in the US, certainly the 1.5 litre Riverina, New South Wales Riverina Magnums that were offered at the wedding, I would say they weren't necessarily a great exemplar of Australia's finest wine. So for the Australian wine industry, having a large chunk of the population not having much income growth is a really tough picture. And certainly getting past the perception that Australian wine is cheap wine is going to be, remain a challenge for the, in the United States market. That's just the reality. Now, China, I don't know, it's a tough question. It's hard to know really what's going on in a lot of ways. Chinese economy is booming pretty much, but what you're actually seeing is it's moving away from what you saw after the financial crisis, this sort of infrastructure investment, industrial production investment, towards a more services-based economy. So when you look at industrial sector growth, that's much slower. But when you look at things like retail sales, they're a bit flat. Mobile data is huge. Chinese economy, the Chinese leadership is trying to get the Chinese economy away from being this sort of middle income, being the world's manufacturing hub, to more high value add sort of industries. That means having a Chinese populace which is able to spend more money on things and be a consumer-based society. So in theory, with 1.4 billion people and economic growth every year above 6%, there's huge opportunities there to sell into that market. But on the other hand, it's a pretty tough market to sell into. When you look at this, secondary industries are pretty tough. GDP down, yeah, it's going all right. But yeah, certainly there's some challenges. Has anyone here actually, this is a completely random point, has anyone here priced up a pair of R.M. Williams recently? Yeah, scary, very expensive. I reckon that's a pretty interesting picture of what happens when you can capture the luxury side of a market. I think that the retail price for RMs now is about $545. I checked it out, I didn't pay it. And it worries me a little bit because they've been bought out by Louis Vuitton, and they're making great strides in export markets, and that's probably honestly where they should be. And in the Chinese market, great opportunities there. But bit tough for us, I think, to be able to buy them now. You look at the Australian wine industry, and I don't have this chart, but it's a good one. You look at the performance of Barossa Shiraz over the last 10 years against basically any other South Australian wine variety, and Barossa Shiraz just shoots the lights out compared to everybody else. Why is that? Because in China, Barossa is a reputation. They think Barossa, they think quality, they'll buy it. So having a great reputation, a brand reputation to sell into that market is highly advantageous. If you don't have it, it's pretty tough business. And I'm going to talk about agriculture more specifically in a second. But for the Australian cattle industry, for example, the Chinese market has been, in my view, an abject disappointment for them. We were sending, a lot of beef to China 13, 14, and then we actually saw volumes decline quite considerably because it's a very tough market on price. So if you're at the premium end of that market, having this growth is fantastic. But if you're in the middle of the range, I did a presentation down in Tassie recently, and they have cherries, great cherry sector down in Tasmania. And they have great opportunities because of quarantine. They can go straight into China. If they're at the top of that market, they can do really, really, really well and make great returns. If you are one step down from the top of the market as an Australian cherry producer, you are competing with Chile, and Chile's labour costs are basically nothing. Land is cheap, and they'll basically eat you for breakfast in that market. So it's very tough to be a mid-range producer selling into the Chinese market. You've got a very small proportion of the population that's very rich and very willing to pay for things, and a proportion of the population which is very cost-conscious, and Australia is a high-cost producer. China's also the biggest economy in the world now. That's a pretty interesting story. I think it'll be very interesting to see where that winds up structurally in the next 20, 30 years. Geopolitically, it's going to be really interesting. A mate of mine who lives in the US just sent me an article this morning about Chinese UFO research, which is pretty cool. They're putting huge money into a whole bunch of stuff, trying to contact extraterrestrial life. They're doing a whole bunch of stuff with AI, lots of really interesting things, lots of long-term investments. Now, are we going to meet aliens? I don't know. After 3 hours sleep, I think possibly. Is it within my remit at the National Australia Bank to talk about UFO research? Probably not, but it'd be cool if it were. But I think the China story is going to be an interesting one long term. And realistically, we find ourselves in an interesting position where we are geopolitically dependent on the Americans. And the Americans now are declining power globally, but we're economically dependent on China. And being caught in the middle of that is going to be something which I think will be a really big challenge for us in the next 10, 20, 30 years. But certainly, when you look at the growth in China and you look at the opportunities there, you would say that's got to be a huge market for the Australian wine industry. Does anyone want to talk about the UK? Anyone? Who sends wine to the UK? Yes, one? Lots? What do you reckon? Brexit. What a mess, basically. I think that the British government is losing cabinet ministers at the rate of one a week at the moment. I think they're going to lose another one today. That doesn't look very good. It seems like the Brexit negotiations are going nowhere fast. I'm not sure if they're even negotiating at the moment. A no-deal Brexit would be a pretty big risk for the British economy. We look at our forecasts for UK growth and we say, oh, it's going to keep sort of muddling along at a pretty low rate. But there's some significant risks to that outlook, and I think it's something worth bearing in mind. Now, the optimists might say, oh, well, Britain's out of the EU, so they're free to negotiate trade agreements with Australia, and there are opportunities in the for Australian producers in that market. But that's pretty tough when most of their trade is with the EU, and basically they're all exporting to sector is stuffed because they're no longer in the common market. So there's some challenges there. But still, I think it'll remain a big market for Australian wine. But the question will be whether it can succeed over the medium term. Now, these are just our currency forecasts. Just quickly, we reckon mid-70s next year, 73, 74 cents. There's a bit of uncertainty about that. What does that say? It says currency could come down a little bit. I honestly wouldn't really expect it to come down a great deal. We can't rely on the depreciation that we saw from sort of 2014 to 2016, where it came down from mid-90s to basically high 60s. That was a great support for Australian agriculture. I don't think we can rely on that again, so we're going to have to basically just be at the mercy of global commodity prices for a lot of things. Now I'm going to talk about agriculture. Who's got cattle? Anyone? No one? Well, that's good, because I think cattle prices are wildly overvalued. And I think, we've just had an incredible run in the cattle sector. You saw Eastern Young Cattle Indicator over, 7.25 cents a kilo, Q3 last year. That was exceptional. It's come off a bit with the rain, with the dry weather, and then it's up a bit with the rain. But there's a lot of grass fever, I think, in the industry at the moment, and that really worries me a little bit. But still, if you've been able to trade through that market, you've had a great run. Detachment from US prices is the tough thing for the cattle sector, and I think, honestly, we'll probably see prices with a 4 in front of them, with ECI at least, next year would be more likely than not. But having said that, I've been predicting that for a while, and it's held up a lot better than I had expected. But, certainly some challenges there. Anyone interested in grain? Anyone got any grain? Anyone buy any grain? One? Where are you based? What do you reckon? I'm farming out my presentation now. I'm just sort of get to that point of the morning. Yeah. You had a good season? Yeah, about average? Yeah, well, you've probably been lucky when you look at, I've been travel up through New South and, the conditions there are pretty challenging, I think it's fair to say. I'm pegging the national wheat crop at 18.7 million tonnes. It's the lowest in the decade, and, the big hits are out in New South Wales, Queensland, to be honest, for wheat production. I can't see prices probably staying where they are domestically. I mean, you've got a big domestic premium for the stock feed market up north at the moment. Barley prices are going absolutely out, through the roof, and I think that's probably not sustainable. Great for you right now, but come January when we start moving to more of an export-based eastern states grain market, once everybody's got enough feed, you have to wonder whether they'll come back. And the reality is, there's a huge amount of grain globally. It's a tough equation. I'll look at sheep, going great guns. We're looking at wool prices basically at record levels. Fantastic. I'm worried structurally. Is anyone here wearing wool? Who's wearing wool? Yeah, that's a worry, isn't it? I had a woolen jumper, but otherwise, I'm not wearing any wool. This is a linen jacket. The pants I bought from Uniqlo, so it's best not to know what's in them. That's a tough equation structurally for the wool industry. We've had a great run because a lot of Chinese buyers have been buying a lot for that northern winter market. I think it'll come down a little bit from where it was, certainly where it has been. Lamb prices are great as well, but still, pretty good returns in that industry. We produce about 25% of the world's wool, and that's pretty good, but we produce nowhere near as much as we did 25 years ago. So I think good returns for those who are still in it, but I'm not sure that we're likely to see a lot of expansion. Now, I reckon we're going pretty well on time. Does anyone want to talk about dairy, just quickly? Any interest? Yeah? All right. Tough picture. It's going all right. It's going better than it was. I mean, international price is going all right. I think the big challenge is going to be Murray Goulburn being sold to Saputo now. That'll basically add concentration to the industry. They already own Warrnambool cheese and butter. That's about 1 billion litres a year of milk that they already control. They'll get another 2 from Murray Goulburn, so you'll probably see a Saputo, biggest processor, at about 3 billion litres a year, ahead of Fonterra at 2. It's been a very tough time for Murray Goulburn suppliers over the last 2 years, that's for sure. But if we can get farm gate prices up, in the mid-5s and keep them there, that's probably the basis for a more sustainable industry, and probably over about 9 billion litres of milk a year is really sort of the challenge for us, being big enough to be able to compete. You don't necessarily always want to go for scale, but if we get that small in the dairy industry, if you're a Chinese investor, for example, or an American investor, would you put your investment here for such a small industry? That's a tough thing. So keeping the industry viable is going to be a big challenge, I think. But hopefully it comes good. Now, that was all I wanted to talk about. You got a question?
Yeah, Finn, David Watkins from Florida.
G'day, David. How you going?
All right, thank you. Would you care to have a hazarded interest rate outlook over the next 3 to 4 years? The hard one.
Yeah. The NAB house view is 2 cash rate rises in the back half of 2018. So coming up a bit from where they are. I mean, rates are at historic lows, at the moment. We think the next move will be up, but not probably for a little while. My sense about the RBA's position is they're sort of a bit stuck, and it's a tough position for them to be in because, on one hand, the Australian business sector is actually doing all right in Australia. You look at NAB measures of business confidence from the NAB Business Survey and business conditions. Business sector is actually going pretty well. There's pretty high levels of confidence in the sector. You look at consumers, and consumers are miserable, broadly speaking. I mean, retail sector's not doing very well. Wage growth is going nowhere. Unemployment's not very high, but people are really, really reluctant to spend. You throw on top of that, in Melbourne and Sydney in particular, a rapid increase in house prices, which has been largely debt-fueled, and you sort of get into this position where, well, can the RBA actually raise rates very high? My fiance and I bought a house 2.5 years ago in Melbourne, and since then, in our street, I reckon prices have come up probably conservatively 30, 40, 50%, depending on the house. Now, that is a big increase over a very short period of time. I'm 32, and none of my friends from school and none of my friends from university own a house except me in Melbourne. Now, that's a real challenge, and it's a structural challenge, but in the short term for the RBA, those levels of private debt and the boosts you've seen to house prices make it very tough for them to move. It's what stopped them arguably from cutting rates more because they were worried about overheating the housing market. Now, going up the other way, when you have a lot of people in debt, and certainly I've got a mortgage, so maybe this is just my own sort of subconscious thinking it through. Terrified. That's a real risk. So getting consumers going again, getting wage growth going again, is going to be a real challenge for the Australian economy. I put that to my boss at my performance review. I said, we've got to get wage growth going again, and frankly, you're number one responsible for it. I actually did do a big consumer purchase yesterday. I bought a second-hand sailing dinghy for not much money, and my fiance is furious about it. So I think that our household's going to have very little consumer spending for the foreseeable future. But I mean, not flippantly, it's a tough question. It's a tough picture.
G'day, Graham from Cranswick Wines, Australia.
G'day, Graham.
NAB has been a very good supporter of the wine industry over the last 20 to 30 years. What's your view of the bankability of the wine industry going forward in Australia?
I'll give you the NAB boilerplate response first, because I sort of have to. Which is, NAB's the largest. I got to do at least a little bit of a spiel about NAB so I can, retain my position. NAB's the largest agricultural lender in Australia. We have about 30% of the agribusiness market. We started as an agribusiness bank, so it's a big thing. It's a big thing that we do, and I don't mean it flippantly. We've been there since the 19th century, and we've got. I think we employ about 400 or 500 agribusiness bankers. So it's a huge, and they're in the country. They're not in capital cities. They get it, and we know that seasonal conditions will change, and that you'll have droughts, and we'll have high currency and low currency. So we're there for the industry, and it's to be honest, been one of the best parts of the bank, and for me personally, great to work in because the agri clients are the nicest clients you'll meet generally. They're always pretty tolerant of stuff-ups, which are many, and they love a chat afterwards. So it's a great sort of thing for me to be in. I think it's an industry that NAB's always is going to be keen to support in the long term because we get it. The head of agribusiness for NAB, Khan Horn, he's off a property. He's got cattle. He understands what the industry's like. So I think we will be there. For the wine industry specifically, I think things are looking a lot better than they were probably even 5 years ago for the industry. Having the dollar above parity was bloody tough. There's no doubt about that. You want to be in the premium end of the market, but the dollar above parity, competing with the South Americans or North Americans or Europe, that's a very tough position to be in. So having it down, around the 70s has really improved things, and I think it's probably a sign that the global glut is coming to an end and you're getting some demand out of China, which is really, really good. So I think the wine industry is probably in for better times. I think the challenge for the wine industry, this has nothing to do with NAB or its commitments to the wine industry, it's just my general thoughts, is that I reckon the future's at the premium end of the market, to be honest. I don't think, bulk wine out of, the Riverland or out of the New South Wales Riverina, there's certainly a market for it, and I've got a 2-litre cask of your lumber in the fridge. I'm not going to say I don't. It's good risotto wine. But I don't reckon in global markets where the South Americans give us such a run for our money that bulk wine dependent on irrigation in a sector where cotton is ultra profitable in the northern part of the basin, and where tree nuts are ultra profitable in the southern bit of the basin. I don't reckon that bulk wine is necessarily in a great position structurally, given where the global economy is headed. That's just my personal sense. But Australian wine industry's, I think, got a really good story to tell about where it is at the moment.
Well, on that point, you looked at China, and you looked at the USA as well. Let's go to the USA. You kind of explained that working class American is struggling, but I think a lot of us here would like to see Australia do better in the slightly higher priced wine.
That's right.
I think $11 to $25 or something like that. What's the middle income, upper income American looking like? Because that ultimately would be the target audience.
Yeah, they're doing all right. In fact, when you look at where the wealth has been created and the biggest income gains in the last 10 years in the US, it's all been the richest Americans, basically. So the rich are getting richer. As Midnight Oil actually said last night, the poor get the picture. So for the Australian wine industry, that's a decent equation. What worries me more broadly, and if we want big picture here, is how sustainable is that in the long term to have those levels of inequality in a country before you start getting some really difficult political ructions, and I think you're already starting to see that in the US. But for the Australian wine industry to be at the top end of the market, certainly if you go to Manhattan, and we spent a week in New York, and it's a great town, there's plenty of money there and they're doing really well. Is Australian wine the wine of choice for young, cashed-up Americans? That's a tougher question. Certainly cocktails and spirits are giving them a big run for their money. I think beer in the US, the craft beer market's done well, but beer's, I think, got structural issues. People want to drink less beer, probably more wine, more spirits. Can we compete against, at the premium end of the market, the French? That's the tough ask.
Okay. Brooke, is there another question there? No, okay. Well, ladies and gentlemen, please thank Phin. That was a great presentation, mate. Well done.